67%. This is the exact amount of TAO's total circulating supply that is currently locked up and staked. Let that sit with you for a moment. While everyday retail traders are losing their minds over the short-term price chop, institutional capital is quietly treating Bittensor as the baseline infrastructure for AI. Today, we are looking at hard, verifiable network data. We have massive, measurable developer activity shipping thousands of lines of code. And most importantly, we have a severely restricted liquid float that is completely ignoring the overall market sentiment. If you only look at the weekly technical chart, you might just see a token trapped inside a descending channel. But if you look under the hood at the on-chain metrics, you'll see a classic textbook supply squeeze forming right before our eyes. Stick around, because I'm going to show you why this specific zone is my accumulation area and exactly how I'm managing my risk if Bitcoin decides to lose its footing. Right now, TAO is trading right around that $190 to $200 level. If you look at the market sentiment snapshot over the past month, it's completely exhausted. Retail participants are tired, they are bored, and they are moving on to the next shiny object. They look at the price rejecting off the key moving averages, and they immediately assume the decentralized AI narrative has completely died out. But as a sophisticated investor, this is exactly the kind of environment where you must zoom out, quiet the noise, and rely on hard data rather than human emotion. This marks my 16th video covering Bittensor, and my 8th in just the last 3 months alone. I have been tracking this exact market structure meticulously because we have arrived at a critical make-or-break juncture. The price is currently finding support inside of a massive weekly descending channel. We are finally starting to leave the lower support boundary, and we are heading toward the neutral middle of that channel. But why does this specific bounce matter right now as opposed to the previous ones? It matters because the fundamental underlying network growth is actively diverging from the bearish retail price action on the screen. The accumulation zone that I established in my previous videos, spanning from $120 up to $190, is starting to get left behind as we push higher. But there's something buried in the on-chain data and the broader market structure that completely changes this picture. We are not just looking at a simple technical bounce here. We are looking at a deep, structural accumulation phase by smart money. Let me show you the raw data I have been analyzing this week. The single biggest mistake people make in this market is treating this project like a standard speculative crypto coin. You absolutely have to look at the subnets. Subnets are essentially early-stage, decentralized artificial intelligence startups that are generating real, verifiable revenue. Currently, over 18% of all the TAO supply is locked directly in these subnets. When we evaluate projects building on top of this network, we have to look at them like venture capitalists. Take a project like WeBuildScore, which is an open computer vision layer. They're generating an estimated $840,000 in annual recurring revenue. Or look at Shoots AI, focusing on decentralized compute, generating around $6 million in estimated annual recurring revenue. We also have the Hermes subnet, connecting blockchain data and AI. You are not just buying a governance token here. You are buying into a network of revenue-generating entities with real, total addressable markets. Beyond the revenue, the developer velocity is absolutely staggering. The top subnets are consistently shipping massive amounts of real code. We are talking about top average code lines hitting 4,519 and 2,237 over 30-day periods. Bittensor is not just pricing in retail attention. It's pricing builders, code iteration, and open infrastructure being built in public. Yes, there are concerns about annual percentage yield leakage caused by unproductive weight-copying validators, but the network engineers are actively adapting to resolve these inefficiencies. And the traditional financial institutions are absolutely noticing this activity. This quarter, the project was officially added to the Coinbase 50 index. With a market capitalization hovering around $2 billion, this inclusion is a massive structural stamp of approval. It forces passive index inflows from traditional finance and adds tremendous structural liquidity to the network. Speaking of liquidity, the network is pulling over $3.3 billion in 30-day token trading volume. That places it as the 16th highest among all Layer 1 blockchains, right up there with established legacy networks. But here's the real underlying catalyst that the market is ignoring. About 68% of the total supply is staked, currently earning over 7% weekly annual percentage yield for the top validators. The protocol is also aggressively recycling and burning registration fees and transaction fees back into the network. This creates an intense deflationary pressure on the overall supply. Add in the high-yield decentralized finance integrations, like TAO-wrapped version paired with Ethereum on Uniswap, which is showing a total value locked of $1.27 million and generating a 256% annual yield. These massive incentives force holders to lock up their tokens, severely draining the available liquid supply on centralized exchanges. This creates the perfect powder keg for a supply shock. Now, let me transition to the technicals. Look at TAO weekly chart. The macro trend context here is critical for your risk management. We have an anchored Fibonacci retracement drawn from the macro high of $750 back in December of 2024, pulled all the way down to the macro low of $140 that we hit in October of 2025, and recently retested over the last 5 weeks. That $140 level is our absolute base of support. Currently, the price action is trapped inside a very clear, very defined descending channel, which I have marked with those orange dotted lines on the chart. We spent the last few weeks slowly grinding against the lower boundary of this channel, but right now, we are finally pushing out of that lower support zone and heading right into the neutral middle territory. We are sitting directly below our key resistance zone, which is the middle of the channel, coming in around $250. If we look at our momentum indicators, specifically our moving averages, we are still trading below the 21 and 55 exponential moving averages. That red line and that purple line are acting as heavy overhead dynamic resistance right now. We absolutely need to see a weekly candle close above both of those lines to confirm a true macro trend reversal. However, look at the Fibonacci Relative Strength Index, located down below the price action. We recently pushed out of the extreme oversold region. It is technically still in oversold territory, but it is firmly pointing to the upside. The underlying momentum is beginning to shift before the price action reflects it. Now, here's my exact personal strategy and how I'm playing this. For me, this is a long-term macro play. Bittensor represents around 3% of my total crypto portfolio invested, not counting stables. For context, Bitcoin and Ethereum represent 65% of my holdings, Solana represents 10%, and other altcoins, like TAO, make up the remaining 25%. I have been slowly building up my position, little by little, inside this exact descending channel. My designated accumulation zone for my long-term bag is the green box on the chart, ranging from $120 up to $190. For the short-term timeframe traders out there, your invalidation level is very clear. A weekly candle close below the bottom of this descending channel completely invalidates this setup. If that happens, the trade is dead. But that's not my case. I have acknowledged my risk with this asset, and I'm absolutely not selling at these levels. I believe this is still a generational accumulation zone for the future of AI infrastructure. As we move to the upside, I have specific take-profit targets marked by the green circles on the chart, perfectly aligned with our Fibonacci levels. The first target is the 236 level at $280. The second target is the 382 level at $370. From there, I'm looking at 500, 750, 1,100, and my ultimate macro target of $1,700. My strategy is simple. I use a manual trailing stop to the upside. If we achieve that first target, my stop loss immediately moves to my entry price. If the second target is achieved, the stop loss moves up to target 1, and I continue that process all the way up, completely protecting my capital while riding the trend. When you synthesize this fundamental supply squeeze with the technical descending channel, the risk-to-reward ratio becomes extremely asymmetric. The upside potential over a multi-year horizon drastically outweighs the downside risk, but only if you size your position correctly and manage your emotions. We have a liquidation heat map from CoinGlass showing heavy leverage clusters above current price. Institutional algorithms actively hunt these liquidity pools. If we get a spark of volume, we could see a massive short squeeze that violently pushes the price higher. But we have to remain perfectly objective. Honestly, in my opinion, Bitcoin is looking incredibly weak in that $60,000 to $70,000 region right now. If Bitcoin drops below $60,000 and loses its market structure, the entire market will bleed. If that happens, it'll be extremely hard for Bittensor to avoid visiting that $120 region. You have to be mentally and financially prepared for that downside scenario. I let the chart dictate my actions, but the fundamental data dictates my long-term conviction. To synthesize everything we just covered, Bittensor is rapidly maturing from a highly speculative AI narrative into a deeply liquid, revenue-generating, institutional-grade protocol. And the weekly chart is currently offering a heavily discounted entry point. The key to surviving this market cycle is relentless patience and strict risk management, not chasing random green candles on the 5-minute chart. If you found this data-driven, analytical approach valuable, please hit that like button and subscribe to the channel so you do not miss the next critical update. I also highly encourage you to join my free Telegram group, which just crossed over 170 members for faster daily updates. The link for that is down below in the pinned comment. Make sure you go back and watch my last 2 videos about TAO because every single video on this channel is a direct continuation of the last one, and it's incredibly important to follow the whole macro story. Finally, remember that everything discussed today is just my personal market perspective and absolutely not financial advice. Thanks for watching, stay safe out there, manage your risk rigorously, and I'll see you all in the next video.